The other big one that we're focusing on this morning is an Avenue Supermarts. So pull up a one-year chart on an Avenue Supermarts as well. Lots of news flow that has come in just this month for an Avenue, including, of course, analyzing their earnings as well as the MSCI inclusion, and now promoter stake selling by RK Damani. There you go. Listed at a premium, doubled on listing day, and since then it's a gain in excess of 100% in the last 1 year on this counter already. In today's trading session too, it is up and about in trade. Let me get in Himanshu Nayyar from Systematix Shares and Research to give us a sense of really how the stock is going to now perform going forward. Himanshu, a couple of things here. On the promoter stake sale, I mean, he has the right to sell it any which way that he wants. But one view on the street is selling at in and around this 1370 to 1380 level. Is it also kind of an indication that the stock is now near its peak and that's why he chose this time to do it?
Yeah, hi, good morning. Within 3 years of listing, the promoter has to get his stake down to 75%. So we can expect more such sales in the future for sure. I think this is the first time that he has sold stake post the IPO, which in a way gives credence to the fact that there is a good amount of demand at that 1350 odd levels. And going forward, depending on stock performance, the promoter has to come back again and sell stakes further. So, yeah, but this gives a good base to the stock, I would say, and tells us that there is a good amount of demand at that price.
So, you don't feel that the stock may have peaked at the moment?
Not really. As long as momentum on earnings continue, I believe just that the valuations are rich is never a stock to fall down. I don't see significant upside, obviously, because of valuation challenges, but I believe it's a good defensive stock now. In case the market has to correct, I think this is a good place to hide where 1300, 1350 looks like a good base for the stock.
That's a valid point. So it is in that defensive category right now. Couple of more things to talk about on this one, Himanshu. Talking about the Q4 earnings, they were good, but they weren't as far as what the street was estimating. I mean, after a period of record outperformance, is it now time to rationalize your expectations as far as the performance from this stock goes?
See, the management also alluded to the fact that FY17 did not turn out as per their high expectations. GST was one of the reasons where there was a price deflation on a lot of the staple products that they sell. And they could not open stores in line with their expectations. But I believe FY19 should be much better. We've upped our store opening guidance from 24 stores to 27 stores. And the company looks well set to achieve that guidance. And with the low base of FY18, I believe FY19 and 20, we can definitely expect a 30% growth in revenues, which is really a very strong number to look at.
In fact, on that store addition front, Himanshu, 14 in Q4 was a bit of a surprise from the street, higher than what they were expecting. The cash flow, the cash on books also halved because of the incremental capex because of this. Considering that they go for the ownership model over the franchise model, this aggressive store expansion, could that put pressure on the books for some time?
Well, not really. If you look at their cash generation over the next couple of years, they should be generating more like around 3,000 odd crores of operating cash flows. And if I assume a 27 to 30 stores incrementally getting added, that's more like 2,000 odd crores of capex. So even if they were to maintain this ownership model, there would still be 1,000 crore of free cash generation over the next couple of years. But they've also, they've also stated that they are also exploring the rental model now with a view to accelerate the pace of store openings. So if that were to happen, obviously the cash flow generation can be even higher, although at the cost of margins.
Absolutely. In fact, I was going to ask you the next. What would be a rational expectation on the margin front for a DMart?
So as of now, we are assuming that it will predominantly continue with the ownership model. And if that were to be the case, I think margins are more, I mean, it's difficult to improve margins beyond the current levels of about 9%. There could be marginal improvement, slight improvements with the mix sort of improving in favor of non-food categories. So we are looking at around a 10 basis points improvement for the next couple of years. But the key thing to track here is that whether they get aggressively into the rental model of stores as well. Because if that were to happen, then obviously margins can come down. But in for all practical purposes, for the medium term, 2 to 3 years, 9 quarter looks like the peak margins for them.
All right. Also, just a couple of more questions, Himanshu, before I let you go. On the same store sales growth at around 14 odd percent, it has been steadily coming down. It is still a very high number, but do you feel this number is sustainable, or could there be some more rationalization ahead?
No, so I mean, over the last few years, obviously it has been steadily coming down as more and more stores get mature. I mean, it's difficult to grow within the same store beyond a point, right? I mean, once your store reaches maturity. So a sustainable number that we will look at would be more like 9 to 10%. In our 30% revenue growth, the composition of that is 9 to 10% same-store sales growth, and remaining 20% sort of growth coming in from the new store additions.
Final question then, your call on the counter and your target?
So everything is good about the stock other than the valuations.
Absolutely.
So currently, I mean, as I said, it's a defensive stock. So our target price currently is 1400 in the stock. Stock is, I would say, trading close to that. So we are obviously recommending a sell at anything above 1400. But as I said, anything closer to 1300 odd, that looks a good point to keep accumulating the stock. But at anything above 1400, it looks overstretched, and so that's our target price with a 1 year perspective.
All right. Thanks so much for joining in, Himanshu, and giving us that view on a DMart retail. Meanwhile, Rasesh